Good morning, everyone, and welcome to Quantum Leap's morning leap session for Thursday, May the 31st, last day of the trading month. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. Nobody can tell you what the market's going to do. Therefore, we have our main Hypo 1 and Hypo 2, or trade plans. We wait for the market to open, see who's taking control, and then execute the plan that best suits the market. Then we have Hypo 3 and Hypo 4, which are our expansion or trend type scenarios. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to, in the pre-market session, and then we do live trading analysis. For those that don't want to sit through the context, you might want to skip ahead if you're watching the video. The hypos will be about 15 minutes in, but the lead up is to give context to why and what levels I'm seeing and how I'm setting up my plan. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for educational purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday. Yesterday, our Hypo 1 was an open auction in range out of value. It moved down to the 96 area and somewhere between 96 and 88, having buyers step in and rotate us up and go hit that target at 1314, and then closing somewhere around the 8 to 9 area. Hypo 2 is an open auction in range, a push up to the overnight high, get a false breakout of the prior day and move down to the 9 or the 11 and a quarter area, and then selling down to 2700, 96, 26, 96, and then challenging that week low down at the 75 and the year open. Hypo 3 is what we got, which was a gap and go, a failure to close the gap, and somewhere around 2700, the buyers step in, rotate us up into that 1314 area, consolidate, move up into the 29 area, and then possibly push up into the 30 and coming back and closing somewhere around the 20. That's basically what we get. We didn't quite get to the stock zone or the trade area up above at 27.30 and a quarter. And we closed a little bit higher. Now, if you take a look at, so value is increasing, and I want to show you this right here. What's the best way to show you? Well, the value area on the longer time frame shifted. This is the micro composite, goes from February the 2nd, shifted from the 68, 69 area up into the 18 area. And then the smaller micro composite that goes from the May 9th, it has shifted higher as well and is now up in the 2350 area. So, you know, and we're holding above it. You can take a look at the overnight session. Overnight session, beautiful Gaussian distribution, a little blunt, but that's what we've been seeing with our value areas, is toothy, boxy looking value area. But you can see that the VPOC from yesterday was at 2350, in line with the micro composite VPOC, and overnight we shifted the micro composite, or the overnight VPOC, up to 25 and a quarter. And this is important because we need to have this price acceptance in order to continue the move up higher if we're going to. Going to be very important today for us to hold above the 18 level. the bigger time frame might cause a VPOC. If we don't, another trip down to the 2700, I don't think it's going to hold. I think we're going to see a push back down into that 69 area in the longer time frame. But I'm going a little bit off track. Let's take a look at the news. We did have continuing jobless claims at 8:30 this morning, better than expected. Core PCE was better than expected. Initial jobless claims better than expected. A little bit higher 4-week jobless claims, but not a big deal. Personal spending was better, so we've got all pretty good news. We did have the GDP coming out of Canada, and it was 0.3 month over month versus 0.2 expected, but annualized was down at 1.3. At 10 o'clock, we've got pending home sales. That'll be the big one for the day. And then, of course, we got Chicago PMI and Bloomberg confidence coming out at 9:45, and then at 11 o'clock we've got crude oil inventories and all the things that go with it. 12:20 we've got Bank of Canada Governor Council Member Leduc speaking, and then we've got Bostic from the Fed speaking at 12:30, Brainerd from the Fed speaking at 1 o'clock. That's about the news. Don't forget that tomorrow is non-farm payroll, right? Just want to verify that. Yeah, non-farm payroll tomorrow at 8:30. So this market could be waiting on this news here more so than what we've got so far today. Each day I like to start with a very simple exercise. I just use a simple candlestick chart. I use a 9 EMA, 20 SMA. I start on the monthly. I do this to see where we are within the trend on each of the different time frames so that I don't lose sight of the bigger picture. The bigger picture right now is a very strong trend, good slope, good separation, price paralleling the 9. We did come down and we've been testing the 9 for the last 4 months, but we failed to close above it. And we've got slope and separation. This trend is still very much intact and doesn't even get challenged until we get into the lower 2600s. Doesn't get violated until we break the 2500s. And that's important to understand, that any dips are just retracements in the bigger time frame. On the weekly and on the daily, you can see we're in this symmetrical triangle. We are compressing for another break, and I think it's going to be out of this 20 to 25 area is where we're going to blast from, either up or down. We don't know. Nobody can tell you. Going to the daily, again, you see this symmetrical triangle that we're forming, and right now we're holding the 9 and the 20. We've got good slope of separation. We are seeing volatility stepping back in. Volatility leads to expansion. Okay, when you're waiting for the breakout, okay, you get this coiling like we've been seeing and tightening. But just before the breakout, you'll see volatility step back in, and we'll see OTF participation. Well, the last 2 days full session ranges has been 56.75 and 43.50. So those are 2 big days in opposite direction. So the OTF is stepping in and testing this, and we had a very significant dip down to test the year open at the 27.75 area, and buyers stepped right back in, and we're right back up here in the balance near the high of the larger time frame value area. So my anticipation is a break to the upside and a push up into that 57 next, and a move up towards the 2800. But can I put out a chance to move back down into the 2700, especially that 27 0350 key line in the sand. I can't. So I just have to recognize that fact. Going to the intraday, the 4 hour, you can see that we are back above the 9 and the 20. We're getting a little bit of slope, a little bit of separation, and you can see that the 9 EMA is sitting here at the 27, 20, 50, and that's that 18 to 20 area that I think is so important that we accept and hold today if we're going to get a move higher. Going to the 30-minute, you can see that basically, the overnight session has been sideways. Now, I want to show you something. I know it's a little bit off subject, but it's something that I always like to talk about. Is we had what we call a Globex gap, and these offer some very good trading opportunities. Now, they're trading opportunities, they're not trading setups. In other words, it gives you a good direction to trade from. And that's where on the ETH session, okay, when we closed, and we closed at 5 o'clock Eastern time at 27.23 and a quarter, and we gap, okay, below or above, this creates a what I call the Globex gap. It has over a 99% probability that that gap will get closed. So how do you trade that? Well, you still have to maintain your risk reward, but it gives you, the direction to keep taking shots in that direction for what will eventually be a high probability target. You can see that we gap down, we dip down to that 18, and then we pop right back up, and then they fought that 22 level, and then they finally come up and close the gap right here at the 22.75. And this over a large period of time, this has got a 99% probability. So it's something always to watch out for, and when it presents itself, if you trade in the Globex, to take advantage of that high probability targets. All my trades, that for those that are in the room or have visited the live room, will begin to realize my first and foremost on any trade setup or any type of discretional trading is to determine where the high probability targets are, and then look for trade setups or opportunities that give you good risk reward to trade towards that target. If you don't know where the bus is going, why are you getting on the bus? That's what I like to say. Anyway, I digress. I've gotten off topic. Let's take a look at the big picture, the structure. Again, just a little bit of narrative. We get this long, beautiful trend up into new all-time highs. Remember that the all-time highs are unequalized, meaning that we have a Globex high, all-time high at 28.83 and a quarter adjusted to the June contract, and a all-time high in the regular trading hours of 28.80 and a quarter. This is a probability target, like I talked about. If you go do some research, it's very rare or unlikely that we're not going to go back up into this 28.80 area and hit 28.83.50 or 83 and a quarter, I should say, in the RTH session and equalize the high. So we put this all-time high in. They tried to hold balance here in the 28.32 area. They gap down. We fall down. We come all the way down to a prior price acceptance area down in 25. 35 area. It's actually 25.29 in the Globex. They buy the buyer stepped in and they take us, and then they try to get us back up into the 2800s, and the two times they get there they fail, and then they come back in, and since we've come back into the value area, all we've done is basically tested both sides of it. Now we've dipped down to the month low down here at 25.91 and a quarter. I think we have 150 point range for the month. And then we come up and we've been consolidating, okay, in this distribution zone around the 18 to 25 level. The VPOX shifted up. We've got price acceptance higher. We did make another dip down, didn't get back to the microcomposite VPOC that starts from the 19th of March, which is still down at that 68, 69 area. That one didn't shift up yet, but the other one has. So I'm watching to see if this shifts up again, and we can hold this 18 area and then finally break through that 41.75, which is our CLVN and our key line in the sand above. It's also our month high, and get the move up into where we last tried to hold value in that 57 area and get the breakout, and then look for a bigger continuation move up into the 2800s once again. So the levels to pay attention to, that 03, 50, 03 and a quarter area obviously is very important. The value area right here for the microcomposite that goes to the May 19th, or March 19th, I should say, the value area is 2698.50. So that area between the 350 and the 98.50 is going to be very important. If we don't hold that, I do not think that we'll bounce off of the 91 or the 84 this time. I think we're going to come all the way down into the 69. If we can hold the 03 number, come back up here, accept the 18 area, then look for them to make a test to the other side of value and the other side of the distribution here, and a test of the 41.75, and hopefully finally the breakout. So overnight inventory is very balanced. Okay, we have a nice Gaussian distribution. It's not giving us a lot of information other than the fact that they're accepting this upper distribution from yesterday. You can see that the LVN is down here in the 18 area, and the upper distribution that we traded yesterday afternoon has been fully traded in the Globex. The European session has been a little bit more positive. We did get a VPOC shift. You can see the VPOC shifted from down here in the 21 area up into the first the 23 and now the 25, but it could shift back down here now that we're coming down. So in terms of levels, our overnight high is at 28 and a quarter. That's just below our week open. Our week open is 27.29. We have a overnight low at 18, and that's just below that microcomposite VPOC from the second. I've shifted the microcomposite VPOC should be from the 9th, not the 10th, but it's shifted to the 23 area. Our overnight VPOC could shift again, but right now it is trading at the 25 and a quarter, or sitting at 25 and a quarter. Our daily ATR, full session average true range 20 period, is running at 29.34. So off of the overnight high, our daily downside ATR target is sitting down here at the 98.75. That's right on top of that value area high I was just talking about from that March 19th microcomposite. The daily upside ATR is up here off of the low of 18, is up here at 27.47 and a quarter. That is right below the mid, and don't forget that the move, that whole move from the 28.83 and a quarter down to the 25.29, the 61.8% retracement of that move is right there at that 49, so at that gap level again. Another important piece of information is our month open. Our month open is at 46.25. We have one trading session left. That means that our monthly critical mass has now shifted all the way down here to the 75 and a quarter. So basically sitting right at the year open. So we essentially, yesterday we talked about this, that our critical mass was at that I think it was at 11 or 14. And I said if we got, let me just make sure where was it? It was at I'm sorry, it was at the 04 level. So our monthly critical mass yesterday with 2 sessions left, we were above it. I said if we drifted into the afternoon and we held that monthly critical mass, we could just continue to drift up into the close. The same thing I am going to give you for today, the end of the month. We are way above our critical mass, so we could get the more we go into the afternoon, if we hold above that, we could see capitulation of the sellers and the buyers just drift us up into hopefully that 41.75 area. So in terms of hypotheses, value area means nothing from yesterday as we are more trendish. So the value area isn't as important. I'm watching this 18 to 20 area, obviously. And then up here with the breakout, this is going to be choppy in between, but you can trade off of this 25 area. So my hypo 1 is going to be very similar. All my hypos are going to be pretty similar to yesterday, except we're closing below the, we're going to open possibly below the close from yesterday in the VPOC. So my hypo for today, hypo 1, open auction in range, a move down into this 18, possibly a push down into last week's low in the 13 area, but I'm looking for buyers to step in here, rotate us up, close the naked VPOC and the naked close, push up into the 29, and then push up into this this naked VPOC up here at 35.75 with a possible late day probe up into the 41.75, and then coming back and settling somewhere in here in around the 35 to the 32 area, and putting in a higher weekly high and closing the month out in a positive territory. That's hypo 1. Let me just open this up better so you can see that. Hypo 2 is a open auction in range, a push up, close the VPOC and the naked close, fail to break out or get a false breakout, and then rotate us down into this 18 area, chop down here, fail, push down into the 09, push lower into the 03, and then either hold the 2700 or just have a quick dip down to the 98, but find buyers, rotate us back up and close somewhere in around this 13 to 18 area. That is hypo 2. Hypo 3 is going to be an open test drive. Failure to get below the 13 level, buyers step in early, rotate us up, fight the high, breakout, push through up into the 35, consolidate, and then get a move up into the 41, and then push up into the mid of this gap, and then find sellers there and come down and close somewhere in around the 35, 36 area. That is hypo 2. I'm sorry, hypo 3. Hypo 4 is a failure. Open auction in range, move up, find sellers at the naked VPOC and close, rotate us down into the 2703, fight the 2700, chop between 2700 and 98, and then fail and push down into this 8850, closing this gap below us at the 9175, and then chopping and pushing through down into that 75 and coming down and possibly even dipping into the 69.70 area. Those are my 4 main hypotheses. Taking a look at gold. Gold has been rolled to the August contract. The composite VPOC that goes all the way back to 2008 shifted from 90.80 to 95.90. Everything shifted up. This should now be added into here. You can see that the sellers have been stepping in this 13.10 area and not letting us get above and get the move up into the 1920 area. Currently, right now, we're trading in around this CHVN at 1305, 1306. We've been doing a lot of chop in this area. Watch the 1300. That's got to hold now. If we're going to get the move up, the 1300's got to hold, and we got to come up and break through this microcomposite VPOC at the 10 area, and then get the next leg up. But right now we're just still consolidating. If we don't hold the 1300, move back down to the 95, 90, 90, 90, 80, and possibly even push down back down into this 83, 84 area. So that's what I'm looking at gold. As always, trade well, trade safe, and we will catch you on the flip side.